Okay, so hi guys, I am with Vineet Patawari. Vineet is a CA, MBA from IIM Indore, founder of Elearn Markets, Stock Edge, and Fincubation, which is a fintech incubator. So first of all, thanks a lot, Vineet. It's great of you to come on the podcast. It's the second episode. Someone like you who like it really motivates us that someone like you
Parvez,
coming on this pod.
so I'm also super excited, Parvez, and thanks for being here. So
It's
really
happening.
excited to talk to your audience.
Yes,
So
yes. So yeah, so first of all, I have this question. What made you all, what made you, Vinay and Vivek to come together to start Elearn Markets first, and after 2 years to step into Stock Edge? Like, how did it start, first of all?
uh, see, what I believe is when you are there on a journey, right, you meet people who are like-minded, and once you meet such people, your journey becomes easier and more exciting. That's what happened with us also, right? So Vivek was doing this piece called Credent Academy, which was classroom-based training, right? I wanted to do something on the online front. My first venture was Fire Up, which was making CAT online. So CAT is the management exam. It went
Yeah.
online at that time, and I
Hmm.
worked on that a couple of years.
Hmm.
Didn't work I expected, maybe too early for the times. So then, I got in touch with Vivek. What we decided is this financial market education piece,
Hmm.
right? We want to take it online because I was also a hardcore finance professional because of my educational backgrounds. Vivek was into hardcore trading, and his family was into trading since generations. So, things were all falling in place,
Hmm.
and we started Elearn Markets in the year 2014.
Hmm.
Once we have the Elearn Markets, and we saw students, thousands of students from all parts of the country coming to learn various aspects of stock markets from us. We realized one thing, that people lack a credible tool to analyze markets, to look at the data, because market is a very data centric
Yeah.
world. You need to analyze companies, their financial statements, and so on. And it was not available to retail audience. Whatever platforms were there were too crowded in terms of their structure, because they are mostly media platforms,
Hmm.
and they're serving too many ads, too noisy as a platform, and not adding relevant value. The decision making was extremely difficult, and most importantly, they were all assuming that every retail individual knows about the nitty-gritties of market, and they can just get inside and do things. Whereas our no. So at Elearn Markets, people who were learning, right,
Hmm.
we wanted to give them a tool which is accessible from anywhere, affordable, and very, very reliable. So we created Stock Edge, and this happened in 2016.
Okay.
So where Vinay came into the picture,
Hmm.
Vinay created Stock Edge, and we realized that he has immense tech talent. So we got along. So in 2016, we merged the two entities and we created a single entity, right? So Vinay also became a co-founder. And if you look at the relationships, me and Vivek, we went to the same college, IIM Indore,
Hmm.
right? And Vivek went to the same school,
Hmm.
right? So we are all connected. That's how we came along. Yeah.
Okay, that's like yeah, I could relate with this when you said this point that
Mm.
the platforms out there are very noisy when you want to I used to do intraday, like that's how my journey started in stock market. Currently, from there I have shifted to investing in mutual funds and just like passive investing. That's where I have shifted upon. So basically,
Must be more peaceful now.
yeah, it's very peaceful. so so basically when I started, there was this thing that all the platforms out there were quite noisy, like obviously like let's not name them. So basically that was a big hassle, and then you had to rely on one or two platforms. Sometimes there's also this ticker issues, or sometimes the price issues are also there, or some issues in candles and a lot. So yeah, so so that hampered the experience a lot. Like कभी कभी ऐसा होता था कि that we used to open both the sites and then put it so that we can confirm यहाँ पे कुछ issue नहीं है, वहाँ पे कुछ issue नहीं है. So yeah, I could relate with that problem a lot.
And exactly we want to remove that clutter, keep things very, very simple. Because see, our motto of our organization was to simplify finance for everyone. And we that finance is made complicated not only because of its own nature, but because the way it is presented in front of people. Right? Can't grasp so many things together, and on top of that, if you make it noisy, complicated ads, right, then it becomes extra complicated. So we try to cut down on all the noise and serve the points which helps in decision making of individual investor or a trader on a daily basis. So that's where we created a difference, and that difference is kind of appreciated by our users. So we get a lot of love from them in terms of great user feedback for Stock Edge. And we now have 1 million plus learners on Elearn Markets and around 1.5 million active users on Stock Edge. So yeah,
that's great. That's great. Those numbers are like quite like those are quite massive numbers, to be honest. Yeah. So yeah. Now, like in 2020, we saw this thing that like in 2020, people became more financially aware. They started focusing on the finances. Like it was not only insurance, but also the stock market got a good boom over there. So how do you think the investment scenario looks like with the Gen Zs? Like obviously, if we see with the millennials, I guess stock market and the investment segment started to democratize somewhere around after 2015, right? So so we can say for millennials, it's a bit too late, but for Gen Zs, it's also like we can say it's at the point. So how do you think the investment scenario with Gen Zs is different from millennials, and what patterns are you able to see that are different?
so that's a very relevant question for especially the audience probably of this podcast. A lot of them will be Gen Zs. So what we have seen specifically post demonetization, a lot of people started coming in markets, and post COVID, it was like wildfire, which started it. And I think in last 16 months, around 1.5 crore new demat accounts got added into the system. If you look at numbers, the retail participation from 2016, which was at 33%, it increased to 45% in this year. That means in overall trade volumes, 45% is contributed by retail audience, and which is used compared to any other market, right? So the retail participation is increasing, right? And if I talk about the new generation, which is coming in, the new accounts which are open, a lot of them are of the people who are of the age bracket of less than 25 years. Okay. And these people, the striking difference between the millennials and Gen Zs is the Gen Zs are DIY generation. I think that's how I would like to define them. The DIY generation, they would like to learn things on their own, execute things on their own. And a lot of them actually comes to them as a learning experience. So think about a millennial, right? Born somewhere around 85 to 90s, right? For him, it was a necessity that he started earning and he want to invest. So investment came as or stock markets came as a necessarily a requirement that I need to invest my money. Right? For Gen Zs, it is coming as a DIY kind of thing. So for example, these days people are learning to create videos so that they can create a YouTube channel, right? It starts from learning. You learn so many different aspects and then you want to do things. In fact, kids have become one of them, right? You want to open a demat account and you want to start trading, you want to start investing the basic items. So though they might not have substantial capital, but yes, they bring in some capital to experiment things, do things on their own, learn basic stuff, learn technicals, and they are eager to learn from various channels, right? So Elearn Markets became one of the channels. Obviously, YouTube is there, serving as an unstructured channel. Then there are other social media platforms also. So for me, the biggest striking difference was this generation is DIY, and I think if they do it right, people who learn on their own, they will not be swiped away right, in the first recession or in the first bear phase. Because typically what happens is people who just enter in a bull phase, which is right now what's happening, they get wiped away, right, when you see a single bear phase. But if you're learning things slowly, right, with small capital, this phase will give you learning, and the bear phase will also give you learning. Right? I'm very hopeful that the youth surge in the number of demat accounts. They will stay active even if in the bear phase of which will come maybe sometime in next couple of years, right? But the whole point is, yes, they are DIY and they are doing things in a very different manner, and I'm very hopeful that they'll do things right and they'll stay.
Yeah, and also there's this thing that I've seen, like okay, there are 2 points I want to talk about. Let's go like one after another. So the first point is I have seen, like, if you just compare the thought process of both the generation when it comes to stock market, millennials mostly think of it as a gambling platform, or something with sort of gambling, like in most of the families, like in my family only, if I have to give an example, that it's considered sort of like, as we say in Hindi, satta bazaar. That's what it's termed as. But when I talk with people of my age, or somewhere around 20 25, so I see them like treating stock market as investing. And somewhere I have also seen this, that Tanmay Bhatt and Ankur Warik, who creating content on YouTube, like they are creating hardcore content on personal finance, and I guess a lot of Instagram creators are jumping into those things. Like there are also cons to it, but the pros are, people are the internet has somewhere democratized this concept, that there are not only cons but there are also pros. And also one more thing I have seen is like people of my age, like obviously they trade from one account, but they have 2 to 3 demat accounts. Like they want to experiment with everything before. Like, how does this look? How does that look? Like one in Angel, one in Grow, one in Zerodha. So I've also seen this thing. Yeah.
Yeah. So the first point is very, very relevant. To see, we have kept one of the objective of our organization is democratizing financial markets, because it was very, very restricted to an elite set of people in the country. Only 3% of the entire population was in markets. Where if you compare to a country like US, it was around 56% of the entire population which was in markets. So that was the need of the hour. Internet was obviously a main reason which created this whole sensation towards market, and COVID especially, tracked everything. It acted as a catalyst and it fast tracked everything. Two reasons: one, people were at home, right, and they didn't have any other options. Market were open throughout, right? So it became a natural go-to place to learn new things. It became a life skill actually, and with people like Variku, etc., also getting involved, this mass influencers. What has happened is personal finance has become a life skill. Earlier it was like, who used to talk about personal finance? People who had money. Now personal finance even if you don't have money, so that when I have money I will be able to manage it better. That was a sea change in the thought process, right? And I'll not restrict it to generation. People of all generation have started accepting these things. For example, your second point, that you should have multiple demat accounts. Psychologically, if I have a demat account in which I'm investing as well as trading, I'll be more tuned towards sell stocks or buy stocks. If I do both the things together, holding becomes difficult. But if I set 2 demat accounts, one for purely long-term investment, which I'll not look on a regular basis, right, on a daily basis, and one which is trading, where I put in some money which I'm even ready to lose, right? So this becomes psychologically more peaceful, right? And you are not playing with your short-term games with your long-term money, So people kind of get these concepts. Earlier, it was very difficult because no one was talking about this. Now, if you don't have a demat account, you will know these concepts because you have heard it from someone. Right? This thing has improved. I'm very optimistic about the whole scenario. What I'm seeing is even the youngsters who are coming to markets, they are coming equipped with a lot of knowledge. The problem with our last generation was we used to jump in markets with money. It's like jumping in a swimming pool without learning swimming, or getting behind the wheels, right, without learning driving. What will happen? You have accidents, you will have problems, right?
Yeah,
That's
yeah,
money. And then we started cursing the markets,
yeah. Classic case.
right? It's a
Yeah.
classical case. Everyone used to do that. And then the fathers and the uncles used to guide us that market satta hai, isse dur raho. Okay? They burned their hands like that. Right? They jumped in without learning. Now let's say you are yourself trading and you have been an intraday trader and now an investor. You understand that if you do it without learning, you are bound to lose money.
Obviously, obviously.
So there is a change. The change is, earlier it was, it's a practical field, jump into it and do it. Now you first learn, and then you have a support of a decision support system, some software, some databases. Once you have solid foundation with knowledge and information, then you take a call, right? And that's what is happening. So that's a good trend, I think.
That's great. Like I can actually relate with that example that in like I don't want to stereotype, but in most of the families there is this thing that there is some uncle that they know who had lost everything, but they don't know which uncle was that. They had lost everything, and I have one question. Like, see, basically the logic is you can't lose more than you place, right? If I am placing 5,000 in the markets, I can't lose more than 5,000. Right, that's the main thing. So now what I think, who's that stupid person who put all his savings, all his assets into a stock or into a bunch of stocks which failed? Like it probably shows that that person is like basically stupid or doesn't know about the markets or was just trying. so so yeah, that was the thing.
I'll give you a concrete example on that. Let's say someone, I've heard this from a lot of people, and I was very, always when I hear stories like this, it's very painful. What happens is someone tells you a stock to buy in. People they go and buy the future of that. Okay, they don't buy the market stocks. Reason being, they give the reason that the growth in the stock is very slow. You have to put in more money. Here I am getting margin. The growth will be faster. Yeah, that's the upside. Downside is when there is a crash or when there is any problem, right? When you have to mark to margin and you have to bring in more money, right? So derivatives, as someone said, that derivatives are weapon of mass or wealth destruction, right? So derivatives have actually, without learning, people have used derivatives, right? In market, still the downside is limited. Obviously, people invested in stocks became penny stocks from very, very high value stocks. That's it. But people have lost big money. They wiped their homes with derivative play. There are derivative plays where there is no limit to how much you can lose, right? So the whole point is this all happened without even people understanding what is happening with them. They only the positive side of it. They never realize the darker side of it, right?
Yes.
Yeah, exactly.
Like this is what I told, right? The con of that people or I would say the celebrities on Instagram or the social media putting out personal finance content is that most of the people are looped into the markets, or like the classic case is crypto, because they say, okay, if you had invested in this at this point, then it would have become this much at this point. So and people don't understand how stupid it is. Like you are just stating the facts. Like at that point of time you didn't know. Now you just want to gain some attention. You are just speaking it, so gain attention. Now your work is done. But what about the person who is just looking at this for the first time, who doesn't have any prior knowledge? And to be honest, frankly speaking, most of the people don't even like to just go Google it or like get some details. They just directly want to jump in. So what about them? Like why can't you just state the cons also? Like there are a bunch of stocks in which you would have invested at that time, and now you would remain with nothing, right? So this is a con of like a point, like people who are just getting into the markets by seeing few, like reels or like or few short piece contents. or like getting motivated by YouTube celebrities.
See, there is no better place to learn psychology than to look at markets and specifically how markets are driven. So
Hmm.
these social media pieces which you are talking about, we all as human beings suffer from survivorship bias. Basically, what happens is we only look at the things which survives, right? We don't look at people who are not successful.
Hmm.
Say, you look at Rakesh Jhunjhunwala and you look at, couple of investors, Ramesh Damani and
Hmm.
others, done it right. Warren Buffett, he's so much talked
Yeah.
about.
Hmm.
There are thousands and thousands of investors
Hmm. Hmm.
who have their money, right? We don't talk about them. I don't
Yeah.
want to be pessimist, but my point is, we should not create a hypothesis entirely based on the best case scenarios.
Yeah.
And the worst thing with social media is it only builds the best case scenario. Whether you are posting your own picture on Insta, you will try to create the best world around you, right? We don't see real people on Instagram. We see
Hmm.
fake,
Hmm.
filtered images. And that's
Hmm.
what happens. All the knowledge which is coming through any social media.
Hmm.
If we don't put filters in our mind to cut down on the noise, then there is a problem.
Hmm.
So social media in one way is democratizing information. In the other side, it is becoming too noisy and too complicated. We need to declutter,
Yes.
right?
Yes.
And get all these rubbish out of our mind. Yeah.
Yes, that's what the thing is, right? Sometimes it's also driven with FOMO. अरे यार उसने खरीद लिया. This guy is tweeting. Like the tweets happened in the case of crypto, and it happened in US. It's like GameStop and AMC saga, which was the Reddit part. So this person's tweeting this. Now it's FOMO. I'll buy it. Like this is a classic case. My friend bought that cryptocurrency because that person tweeted it, and after that it just fell down, and he comes and asks me, bro, ab main kya karu? I'm like, sorry, bro, I'm not in. I don't know about that cryptocurrency. I have not researched about it. I have negative view about that particular currency. So, I would like to ask, what made you buy it at first? And the second thing is like as we are talking about Rakesh Jhunjhunwala, Ramesh Damani, and Warren Buffett, like there is this also classic example you get in our houses that if you want to invest in funds, like look at what happened with UTI and Harshad Mehta. Like what was that? And that's a whole different story to be honest. Like when we talk about Rakesh Jhunjhunwala, when we talk about Ramesh Damani, it's all about value investing. Like even if we talk about Nikhil Kamath or Warren Buffett, these people speak about value investing. These people don't go behind IPOs. These people are like, एक right time आएगा, there will be a right price, and we'll buy it. And Warren Buffett says that like I found his thesis, his philosophy of buying stocks like very appropriate. Like he first doesn't jump to the price, क्या है इसका price क्या है. He's like first he'll go through the fundamentals. He'll see the future of the company, like how futuristic it looks, and then he'll jump on the price, so that there is no price bias created in his mind. And apart from that, what I feel is sorry, not what I feel, what he says is that he doesn't buy stocks as piece of, as just like because it has growth or something, but he sees that buying he sees it as buying a piece of business, which is a big thing. Like when you're buying a business, like if you think in that way, it's a whole different game. When you compare it with just like, when you think of it, I'm just buying shares.
See, the biggest problem with us as individuals is we don't want to close doors. We want all the doors to be open,
Yeah.
right? These individuals who have done good for themselves,
Mm.
we should also the doors which they have closed, the opportunities which they let go. For
Mm-hmm.
example, value investing, and you are deeply in markets, you are letting go the urge to trade on a daily basis.
Yeah. Yeah.
You are letting go a lot of things. So
Yeah.
the point, and you also keep calm when your stocks are 50% down. You take
Mm.
those drops and you still don't get out of those stocks because you
Mm.
have conviction, right?
Yeah.
What is valuable,
Yes.
right? We don't see all these things. We only see the positive side that he entered at this price, it went to this price.
Huh.
Because he also waited when this thing went down by 50%. He didn't
Yeah.
get out.
Mm.
He was always sticking around because he had conviction. He took it as a business. So the whole point is every individual has his own way of dealing with markets. I'm not saying trading or invest versus investing. I don't want to get into the debate.
Yeah.
Everything is, you should have your own way. You cannot live your life based on someone else's story, which is already done. Right? To create your own story, it should have its own principles, and you should live by those principles and let go a lot of things.
Yeah.
Right? Time you will start this, this urge of keeping all your doors open. Right? मैं trading भी कर लूँ, मैं investing भी कर लूँ, मैं intraday भी कर लूँ, मैं swing भी कर लूँ, मैं derivatives भी कर लूँ, मैं crypto भी कर लूँ. तब तक you will not make money anywhere.
Yeah, it's just sort of like, you're bouncing from this to this, then this to this, then this to this. It's like,
Exactly.
it's like why I shifted to, like, again, to passive investing, or just like investing in proper, like, just keep it side mein, keep investing every month, and use rehne do, like, don't touch it. Because at the end, if you are investing in good stocks, if you are investing in fundamentally good stocks, credible companies, then future may, there is certainty that वो return देगा. Like,
Correct.
like companies with good backbone, and not just investing in any YOLO stock. So basically, the how this thing came was, like, by experiencing that, okay, intraday is like, it's very crowded. Not crowded, it's very chaotic. Like, matlab 8:30 baje se you open and sit, then you put the scanners, and then you go with it. You put your study. Okay, कल क्या हुआ था? इसमें अभी stocks में what are the news now? And so it's very chaotic, and it's like, now once you have done the trade, फिर उसके बाद क्या होता है, once you have got a good trade, you are in that mood. Okay, एक सही हो गया, और एक करते हैं, अब एक और करते हैं, and then one goes wrong, you are just sitting whole day, अरे यार बहुत खराब गया ये trade. So that was becoming chaotic, and then I was like, okay, let's keep it aside, and yeah, and I just like put it in, like, let's just invest passively. That's the best way.
So I would say in one line, it is like, do what
Yeah.
suits temperament.
Yes.
If your temperament is of a hardcore trader, you need excitement, you need ups and downs.
Yeah.
It's good. Yours is more peaceful.
Yeah.
If as an individual you are a peaceful guy who doesn't like to be, too much of ups and downs in your life, do peaceful investing.
Yeah.
So it depends on that.
So yeah, it's all like like obviously, like I have a cousin, like, he's like hardcore day trader. I'm like, investment में ही रहेंगे हम, like, because that's what my point is, that's where his point is. So yeah, like talking about all these things, what are the differences in investment behaviors you see between Indian investors and American investors?
The two markets are very, very different. US is a very, very matured market.
Yes.
It is also maturing very, very fast. Right? I would like to substantiate few points with some data which I have back of mind. So, one thing which I told you, that around 55-56% people, adult US, are involved in markets, whereas in India, the numbers will be somewhere around 4 to 5%.
Yeah.
Right? Even after all the growth. Look at the size of the markets. US is somewhere around $55 trillion, right? And $3 trillion.
Yeah.
Right? So there is a big difference in the two. In the difference is in terms of the institutional investors. So India is more towards retail individual involved in the markets. So as I told you, around 45% of the total trading volumes in India are created by individual investors, and this includes the HNIs also.
Yeah.
Okay. But in US, around 62%, the majority of the market volumes are driven by institutions. And even the market cap, the entire market cap, 62% of it is held by institutions.
Okay.
Right? In India, the number is somewhere around 20-25%. Okay. So there is a difference in that. That means an Indian investor, right, has two routes. One, it goes through mutual fund route, and the other, a lot of people are now participating directly, the retail route. Right? Whereas in US, the preferred route is through an institution, not the direct participation. Okay. So that makes it very, very different. If you're not directly involved in markets, you are not getting involved in the research which is required to pick up stocks and all. You are like you to take up a mutual fund, which can be a diversified mutual fund. So people in those cases, they are more towards institutional investing. That's a big difference. And apart from that, we as a country, we have started investing in equity markets. It's a very early phase, right? We have a long learning path in front of us. We have not seen $1 trillion companies created, right? So we will see all of that. Our markets are maturing. We are allowing loss-making entities now to list. This is the first thing which happened, right, with Zomato.
Yes.
US has been doing that from
2000, before 2000, right?
Yeah. So you have so many $1 trillion companies which are created because they allow this thing to happen. So we market, we are maturing, we are taking steps, baby steps, but I think our regulators are doing a commendable job in safeguarding the investors and at the same time taking progressive steps, right? So we are early in our journey, they are at a matured stage, right? The same thing with individual investors also. In our case, people are experimenting with direct equity, mutual fund. There are people who are shifting from FD and first time getting into equity, right? Huge percentage of people are first time burning their hands, right? Or getting their hands dirty, so to say. But in US, things are done and dusted. In fact, they are not at their all-time high. After 2008 crash, the retail participation actually dropped, right? Earlier it was even higher, and now it is somewhere around 55%. So the whole point is they are at a much matured stage, and we are just taking birth, I can say. That's the
Okay, so in US, is it like most of the people come through hedge funds and all in the market?
So they have many more options compared to us. Okay. So in our case, a lot of new options are created on an everyday basis. Let me give you an example. SGB, which is sovereign bond, incredible thing, which got created by the initiative of Government of India. So Indians used to love to invest in gold. They created an instrument which is tradable, right? Similarly, US had so many instruments wherein you talk about REITs, where you can invest in real estate through hedge funds. You talk about very thematic and sectoral mutual funds with the range, right? A lot of more options compared to us, right? Plus, for them, for example, in our case, for startup investing, right? A semi-IPO thing was created, right? But that's not yet liquid. So there are a lot of markets which are not yet liquid and can be made liquid. So that's the primary difference. They have many options. In our case, options are created, including the hedge funds and so on and so on.
And like talking about hedge funds, how do you see hedge funds in India? Like currently, I don't think there are many. Like I guess is United Beacon, if I'm not wrong, it's by Nikhil Kamath. Is that a hedge fund, if I'm not wrong?
See, in India, the hedge fund structures are very different.
Okay, right? like how does it perform?
So since we are talking more about retail audience, the retail audience has very little to do with the hedge funds, right?
Hedge funds are for HNIs,
hedge funds are for people who, number one, HNI. Because why HNIs? Because there is a minimum capital benchmark, and that is done so that even if you lose money, because then you when you are taking positions in derivatives and you are taking positions you're allowed to short your shares and all. So there you have higher risk, right? And we don't want to expose our regulators don't want to expose retail individual investors to that kind of risk, right? Hedge fund is restricted to more of institutional and HNI investors in India, right? But yeah, things will slowly, some parts of it will become open up and will be available for individual investors also. But for the time being, let us restrict to that it's more towards institutional.
Yeah. So basically, so okay. So what does your vision look like with Stock Edge and Elearn Markets? Like what's next? Like obviously there has to be something, right? Like I can say this. Like see, currently, like as we are introducing this, like we are redefining budgeting with Finave. We are redefining a way through which, like you can gain control of your money. So that's not the thing we actually want to do. But yeah, like that's what we want to do. But that's not the last thing, right? Like there's always a vision. Like like we have things written down that 5 years down the line we want to be like create a bang in these segments, and we want to be at top in these. So what does the vision of Stockage looks like and Elon?
Yeah. So Parvez, that's a great question, because our entrepreneur always wants to talk about his product. So in an investor's journey, I told you that learning is very, very crucial. And then part is data and analytics. So on learning, we have Elearn Markets. On data and analytics, we have Stock Edge.
Yeah.
We are creating the third piece, which is around collaboration, which is around social investing. And it is called Stock Edge Social.
Okay.
The whole idea is, once you have learned about something and you analyze, you always want to validate your idea. So you feel that I want to invest in Reliance, right? I've done my analysis. I understand balance sheet, right? I understand the prospects, management, etc. Now I want to invest, right? But I have to check whether I'm right or not. So you go and you talk to your uncles who have some knowledge, to experts, and you. So what we are trying to do is create a social framework, right? We are actually calling it Stock Edge Social, and this framework will help people to collaborate and share and discuss ideas, and also to get ideas from experts. So this will be kind of a platform where experts will come, well, all retail individual investors will come. They'll discuss more on a social network kind of platform. Right? So we're working on that.
This
And
sounds pretty interesting. Yeah,
we are very, very excited about this product. On Stock Edge Social, we have already launched the beta version of this, and we are doing this experiment with around 2,000 users of ours, paid users actually. Very, very people who are very, very active in markets. We are doing beta with them, and soon we'll launch it to public at large. And we are really, really excited about this product, because this can be a social network of stock market people, right? Yeah. So excited about that.
I'm currently, correct me if I'm wrong, but I'm currently imagining it as a Reddit of stock market, if I'm not wrong.
Yes. So what happened with Reddit in US? So we'll obviously put in checks and balances that things are more controlled here. Yeah. But yes, what we are trying to build, more like a Facebook or more like a Reddit around stock markets. Yes.
Yeah, this is pretty interesting. Like see, like there is this thing obviously that we humans are social animals. We always want to know what's going on over there, what's going on with him, what's going on with her, and like when you're creating something like this, and it's also democratizing this thing where where actually the big investors can also come, or I guess the experienced investors, that would be the right term, can come and interact with them, or just like talk to them, like that that would be that would be playing a huge role.
Yeah, exactly. So we'll throw it open to not only people but also organizations who want to come and create audience around them, right? So for example, a broker, right? A broker can disseminate a lot of information through this platform now. So the whole idea is the information sharing process should become very, very seamless and democratized. Everyone should have all the information real time, right? And another thing, very, very crucial thing is, see, most of the successful platforms are made around a tool. For example, if you look at Instagram, it was created around a tool which was of photo sharing.
Yeah, photo sharing. Yeah.
photo editing. So you can edit beautiful pictures in Instagram, and around that, our entire social media is created. Okay. We want to create it around stock market. So the very nature of the platform will be around stock market information, right? And about this will also bring two things, very, very crucial thing. One, credibility to the people in terms of, let's say, what the problem today is with all the platforms which are there. You post an idea, right? And people just jump on it. As you said, someone tweeted and people jumped on it. There's no no one is held responsible for anything. Right? If you suggested something, it moved up, it moved down, every post will have tag of that and will have accountability that this you suggested 1 month back and this has gone down or gone up. What was the performance, right? And if you keep it time centric, then it opened here, it closed here, and what was the performance? So what we are trying to do is create a lot of accountability into the system in around stock markets. Because right now anyone can come and suggest anything on TV, on Twitter, everywhere, right? And there's no accountability. If it is hit, they'll again publicize that. मैंने ये इतने इस भाव में पहुंच गया. But if it's a loss-making thing, no one will come back and tell you that because मैंने 100 रुपए में 50 रुपए पहुंच गया. I will tell you.
It's just the educational purposes.
That's what we want to change. There are a lot of other things also we are working on in terms of that particular product. So yeah, that's keeping us awake these nights. Yeah.
That was interesting. So yeah, so this is the last question I have. So according to you, how should one start their journey into the markets? Like imagine me as a naive, like just a person who has heard about the markets and now I want to step in to actually start investing. Like basically that's how one should start. Just like invest a bit and then watch the markets. Like how should one, according to you, start their journey into the markets?
Yes. So we are actually talking about the journey, the milestones or the steps in the journey of an investor. I'll talk about it once again. According to me, there are 4 steps: learn, analyze, collaborate, and the 4th one is transact. Okay. These are not linear, but these can happen simultaneously also. But I would suggest this to be a linear process. You first of all learn what are the terms, the basic concepts of markets before actually jumping into it. Right? First thing is learn. Second is analyze. Right? You have understood something. Now you find out your own stocks based on the investment philosophy which you have created for yourself, based on the learning which you have gathered. Right? You have learned about various concepts. You created a philosophy that I'll only invest in cash flow positive, consistently cash flow positive companies. I'll invest very good management. I'll invest, you create an investment philosophy for yourself. So second is you analyze that whether these companies are meeting my investment philosophy or not. The third is you collaborate and you validate your ideas. And the 4th is you ultimately go and transact. Right? If you are a learner, first timer, you start with learning. You can have a Demat account where you are, to implement your learning. You have to analyze, right? First step is not transact. First step is you analyze. जो आपने सीखा है, is it applicable to a particular stock? Okay. For example, you are trading, you have learned trading, right, based on technical parameters, right? You some platforms, some software, something which can tell you that this particular stock or these list of stocks are meeting your parameters, you can go and trade. Right? It cannot just मैं trade करके देख लेता हूँ. It's like swimming करके देख लेता हूँ. ठीक है? If you are shallow end, तब तक ठीक है. If you go on the deep end, you will be in a problem. Right? So the problem is follow these in a linear approach. Learn, analyze, collaborate, and the 4th one is invest or trade or whatever, transact. That's what you should do. And you are most welcome to come to Elearn Markets. More than said, huge repository of free content, right? With that, you can download Stock Edge to analyze stocks. We have integrated a lot of learning in that also. So the first two steps are taken care of. Third step, we are launching very soon, collaborate.
Yes.
And fourth, transact. We are also integrating transaction in our Stock Edge platform. So you analyzed a particular stock, you liked it, you can trade it from there itself. So we are trying to do this investor's journey, and you are most welcome to come and be with us.
Sure. So is it like you are creating an ecosystem, matlab jaise like around the stock markets?
So this is a very well thought of strategy. You know, from last 3-4 years, we are trying to do that. When we got into Stock Edge, you know, before getting into that, after learning, we realized that learning is not enough. Most of the learning will be lost and will be of zero value if people actually don't go ahead and analyze and transact and do things. Because this is not a theoretical philosophy class ki chalo सीख लिए अब जिंदगी में कहीं ज्ञान देने काम आएगा. This is not that. You actually go and trade and do things. So we thought that an investor's journey will have these 4 steps, and we need to work on all the 4 steps, right? So slowly we created that, and now by the end of this year we'll have the complete ecosystem, right? So what we are planning.
That sounds great. It's like all the best for it. And there's one more thing I would like to appreciate, that as you said, I've also checked the Elearn Markets, and there's also this huge repository of free content. So this is what's needed, you know. Like basically, if you go on some platform like YouTube, obviously there's a lot of content over there, but high chances, you know, the credibility factor won't be there, because there are like hundreds of people creating content around one particular thing, and I've seen this. Everyone has a different thesis. Like not everyone follows same thesis, right? So like the classic case. So some like to step into from the IPO phase. Some like to step in like from the perspective of value investing. Like everybody has different theses. So it's like actually it confuses you, and you don't know which thesis to follow, and how credible it is. And obviously it also impacts your further learning, when you're not able to link it, like there is a thought which strikes, like it goes in a pattern. Okay, I have learned this is linked to this. So now what happens is, when you have learned it from this person who has a different thesis, and now you jump on to other person who has a different thesis, so you would find that it's somewhere not matching. There are some things which are contradicting. So yeah, so this is a great thing.
Yeah. So on our learning platform, what we have done is, obviously, it's not only videos or not only live interactions. I try to gamify it by telling you that after you've learned balance sheet, let's play around with a real balance sheet, right? You create one, play around. So that gamification, we call it interactive learning tools, are embedded. So the whole idea is to give you a practical experience of which is obviously missing in case of YouTube. Or one more very important, because I also learned a lot of things from YouTube, but the problem what I see is most of the content has 2 problems. One, YouTube demands sensationalization of content, right? You have to create those clickbaits, those ऐसी सिंपल प्लेन चीजें काम नहीं करती, ठीक है? आप 1 लाख से 1 करोड़ कैसे कमाएं, ये काम करेगा, राइट? बट आप 1 लाख कैसे कमाएं 1 लाख से, ये काम नहीं करेगा. एक्चुअली यू हैव टू लर्न कि 1 लाख से पहले 1 लाख कैसे कमाएं, या 1 लाख को बचाएं कैसे. अगर आप मार्केट डाल रहे हैं तो सबसे पहले ये सीखना पड़ेगा 1 लाख जीरो कैसे नहीं हो जाए. ठीक? If you put that, no one is interested on YouTube. Yeah. So YouTubers can't do that, right? So problem is with that kind of sensationalization which is done in YouTube and others. So to save yourself from that, you have to learn in a structured manner. Our brains actually need a structure, right? If you want to learn from 20 different places, right, and if you want to connect the dots and do all of that, right, it's too complicated for our brain to handle that. So other method is do a proper course, right, where you can learn in a structured manner, and you can also understand how to practically implement those things, right? So that's the advantage. And obviously you मैं इस पे कितना भी बोल दूं, the better thing is you experience it yourself, right? obviously a Udemy the Coursera's and the EDX of the world will give you a much better experience in learning compared to a YouTube thing, right? But
yeah,
only experienced by people who have actually done proper courses, not only started but
yes,
complete course. So that's what we are trying to implement at Elearn Markets also. Come, experience, and let's see. I would love feedback.
sure, 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 for sure. So, let's call it an end. Like, I guess there are endless things we can talk on. So yeah, it was again, thanks a lot for appearing. Like, it's great of you.
Right, it's an hour, and I never realized that we have spent so much time. It was just
Yeah,
going on.
yeah.
Wonderful. It was wonderful
Yeah,
talking to you.
it's my pleasure. It's my pleasure. I'll
Chalo.
just take it.
Thank you. Thank you so much. Thanks a lot. Yeah.